General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right. Today is Friday, 5/15/26. Let me see, did Tuesday hold? It did. Tuesday. Yes, it's not, but we already did that. Daily delivery. Okay, Asia started it. This is not a classic delivery profile. Price chopped as soon as New York open. TGIF business was taken care of before New York open. Look at the hour chart. We revisit this. Today is delayed. Finally got the retracement. Nice down day. Not bad for a Friday. I actually expected it to be more violent, but the New York session was timid. Okay, let's look at SPX. Okay, PM session did the thing over here. We got lower lows. PM session and SPX lower lows. Nasdaq stronger because that's Nvidia earnings next week. Earnings next week. Let's go. Notice the hour chart. Never even, it's just one-sided. We used this 2-day high, chopped, respected this gap, and came back to Monday. One-sided day. Choppy AM. With the PM continuation. Sell. Let's go here. Daily chart. This is profit taking. Not panic. Or even correction. Let's look at the stocks. The SPY. Okay, that's just gap down chop. Gap down chop. Stayed in this range all day. It never made. Came back to the low of a morning session. Choppy day. Tried to fake rally, but nobody believed it. Let's look at Nvidia. Came back to that first gap. We still got another gap down there. See, just going back up on Monday. People might just want to take risk off the table for the weekend. All right. TGIF. What did I do? Just looking for the sale. Did I follow the plan? No. Took too many trades. If not, what caused it? FOMO. Wanted to sell all week. And it sold overnight. Got me. What do I do differently next time? Take a break after a loss to get myself together. What did I do well? Execute it without hesitation. Nope, today was a trade day. Key pattern found. FOMO. Lost string over trading. Mostly losses. Rapid reentry. Direction flipping. Need to be right behavior. About 6 documented trade events with execution drift. May 15. Clear process improvement. More scratches. Better rule following. Stronger setup. State and execution stores. Main risk was late sets and drift and hope. The stronger coaching focus. Pause rules after losses. The dashboard suggests using the mandatory reset after any stop and stopping live trades when the state drops below 3. Did the framework play out? Yes. We got the sale, we just didn't get to participate. Do you learn about pattern and narrative or myself? Biggest thing is expectation. I expected big week for options expiring. So took shots on expectation instead of just trading regular. And letting the good trades come to you. So boom. this is the rule. Normal loss, take a break. Normal loss means valid setup, follow rules, stopped out, step away for 5 minutes minimum. Put that trade in my playbook. What's my setup score before entry? What's my stake score now? Am I looking for the next valid setup or am I trying to make it back? You can trade again only if stake 2 is lesser or greater than 3, and the next setup is also a setup greater than 3. Emotional loss, take a setup break. Now, emotional loss means you felt FOMO, revenge, or frustration, urgency, or I need to get it back action. No more trading until one full A plus setup passes without you taking it. That sounds weird, but it proves you are back in control. You are trading patience. After you watch one valid setup pass and stay calm, you may resume on the next valid setup. Level 3. Rule break loss. Stop for the day. A rule breaks loss means oversized chase, move stop, average down, flip direction impulsively into without setup, or took a trade while state was in 1 or 2. Action done for the day. Switch to review or sim only, not because you're bad, because your data already showed that one loss often turns into a loss stream when the next trade is driven by repair mode. That rule I give you for now. After any loss, 5 minute break. After any emotional loss, skip the next setup. After any rule break, done live for the day. Before the next trade asks, what does my playbook say? And what are my setup stake scores right now? What will I watch for tomorrow? Tomorrow will be a review. And journal deliveries. Boom. All right. That's it for today. Have a good day. Peace.